Hello, welcome back to Dead Money Trade. Today we are going to be talking about a certain type of retirement account that you may be able to take advantage of. Um, why are we talking about this? Well, there are approximately like a week until uh, tax deadline, and this could be beneficial for you if you are interested in this. Now, what are we talking about today? Today we are talking about a Roth IRA retirement account. Now, you might have a 401k with your employer. Okay, might have an employer-sponsored retirement account. This type of retirement account is an individual retirement account where you are in control of what's it invested in, um, and you just have basically a little more control. I know with some 401ks you can choose what you're buying, and of course if your employee matches you for your 401k, you should be definitely um, in that employer sponsored 401k. But it doesn't hurt to have more investment accounts. Um, and you can have either a traditional Roth IRA, or sorry, a traditional IRA or a Roth IRA. I want to focus on the Roth IRA today. The reason being is that it offers you more flexibility. Let's get into some points here. So, in a Roth IRA and in a traditional IRA, your gains are tax free. Okay? Your gains are tax free. Now, that means that any money you make trading, investing, the earnings are tax free versus in your individual brokerage account, you have to pay short term capital gains, long term capital gains. In a retirement account like this, the gains are tax free. Okay? In a Roth IRA, the gains are tax free. Now, this is not the reason that the gains are tax free, partly, is because you can't take out the gains until you're of retirement age. And I just want to be clear, in a Roth IRA, the gains are tax free. Okay, in a traditional IRA, the gains aren't necessarily tax free, they're tax deferred, meaning that you will pay taxes on the traditional IRA gains once you withdraw them. All right, so uh, I messed up on that earlier, but in a Roth IRA, the gains are tax free. Okay, so this can be very beneficial. Now, the government doesn't just let you deposit as much as you want into these types of investments accounts because they're very beneficial to you. You can only deposit to a Roth IRA if you're making less than 138K for single filer or less than 218K for joint married filing. Okay, now this is for the 2023 contribution limits. Why am I focusing on this? It's because you have about a week to max contribute to your 2023 Roth if you qualify under these terms. Now, what's the max contribution limit? 6,500. Okay, so you can only contribute 6,500 unless you're older than 50. And if you do make more than these income limits listed here, you can still contribute, but up to a certain reduced amount. Okay, there is something called a backdoor Roth IRA that can let you get past this, but just want to focus on the basic stuff today. Okay, back to our pros and cons. Uh, Another nice thing about the Roth IRA, conversely to other 401ks or traditional IRA, is there's no required minimum distribution. So you're not forced to take the money at any time. You can leave that money in there until you die if you really want to. And this way you can leave your beneficiaries with some investments that have grown tax free. Okay, now, what if you want to take out, what if you need to take out money in this Roth IRA? Well, you can. You can withdraw your contributions, but not your earnings from a Roth IRA at any time without penalty. So that 6,500 you put in every year, or next year is going to be 7,000. You can take that out if you need to. Okay, most people don't because they're trying to compound on these tax-free gains. There are some other ways that you could withdraw some qualified withdrawal distributions to avoid the penalty. Now, there's a 10% penalty if you do have to make if you do withdraw your gains and over your contributions, but there are some exceptions. Some exceptions are medical expenses if they are over a certain income threshold, um, certain health insurance premiums if you're unemployed, if you become totally or permanently disabled, terminally ill, if you inherit the Roth IRA. I kind of want to skip through some of these. This audience is probably the younger crowd, especially since I've catered some videos with the Bitcoin. So some things for the younger crowd: um, higher education expenses, 10,000 for your first home purchase, and 5,000 for each qualified childbirth. Okay, now some of these do have another rule that applies, which is the 5-year rule. You need to have your Roth IRA open for 5 years for some of these to apply for the exception to the 10% tax. Okay, so it is important that you open a Roth IRA as soon as you can, and whatever year you open it in, it becomes active. Like they backdate it to the January 1st of that year. So if you open it in this year 2024, technically it's open since January 1st 2024, and that 5-year exception would end in 2029, I believe. Um, so that pretty much covers it for the benefits of the Roth IRA. Definitely look into this yourself. I'm not a tax advisor. It's important that you do your own research, and I'm not trying to give financial advice. This is purely for educational purposes. If you found this video helpful, please like and subscribe. Comment down below if I missed anything or got anything wrong. I appreciate you viewing the channel, and I will see you in another video.